Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of June 6th to June 12th. This is a kind of detailed reporting of what happened in the luxury market, what happened in the Manhattan market, and what happened in the Brooklyn market. This report is designed to help you be better informed. So as you're making decisions about buying and selling in the New York City market, you have the latest details to help you when you're planning your move. Let's get started with the luxury market. There were 25 contracts signed last week. That is 3 fewer than the week before. This is kind of surprising because we had a sort of an awful week last week in the stock market, and it's kind of a bumpy time overall. So it's interesting that we did have that kind of contract activity. Condos outsold co-ops 15-7, and there were 3 townhouses in the mix. So let's take a look at the top 2 contracts that were signed last week. The number 1 contract was Penthouse 29 at 301 East 80th Street. It was asking $26.495 million. It was actually raised from $25 million when the unit was offered off of floor plans in the fall of 2019. This penthouse has a little over 6,500 square feet. It includes 6 bedrooms and 7.5 bathrooms. It has 13-foot ceilings and a terrace that totals 193 square feet, and the terrace faces west. The unit is in the new Beckford Tower. Beckford Tower is a 31-story limestone condo with 72 residences. It was designed by William Sofield. The amenities include a doorman, fitness center, 65-foot swimming pool, half-court basketball, playroom, game room, and residence lounge. The number 2 contract was 2B/4 at 3 East 75th Street. It was asking $22.5 million, reduced from $24 million when it was listed in February. This is a pretty dramatic condo. It is a duplex. It has almost 5,300 square feet. It includes 3 bedrooms, 3.5 bathrooms, 3 fireplaces, and 2 terraces. It features a 28 by 28 great room with 17-foot ceilings and a mezzanine library. The owner paid $7,989,425 back in 2006. The apartment is in a 7-unit, 50-foot wide limestone mansion that was built in 1904, and it has no amenities. So those are 2 really interesting contracts, and it's going to be interesting to see how the luxury market fares over the summer as we head into the summer months. So let's take a look now at the stats. The total weekly asking price sales volume was $205,380,000. The average asking price was $8,215,200. The average discount from original ask to last asking price, 2%. And the average days on market, 349. Those last 2 statistics are also a little interesting. We're seeing a little bit less negotiability this last week. It's been hovering around 3%, sometimes even higher in previous weeks. Hard to say exactly what that's about. Perhaps sellers have just gotten a little more realistic and a little more in alignment with where the buyers perceive the value in this market. And the average days on market, not bad for luxury, 349. All right, that is it for the luxury market. Now let's take a look at what happened in Manhattan. interesting times in the Manhattan market. What do I mean by that? Well, we're seeing some shifting, as I've been saying in the last couple of weeks. We saw the supply go up by about 436 properties. That's down about 10% week over week. Contract sign was also down maybe 1%, so not by much, but still a very robust number, 250 contracts signed. Sellers, this is still your market, but we are heading into a time of likely of some change. I'm not saying huge change. I'm not predicting seismic changes. Don't forget, our market, unlike a lot of other markets in the country, did not have those meteoric price increases. Therefore, I truly believe that our adjustments will be less dramatic. So let's take a look at these charts. Let's take a look at the supply. Yes, the supply was down a bit last week, but overall, the actively listed properties continues to rise as we are moving into these summer months. And the pending sales, while not dramatically lower, have been trending a little lower. So perhaps we're going a little sideways for the moment. Now, weekly new listings are ticking upward overall as we look not just week to week, but we're seeing, seasonally speaking, comparable levels. So who knows where that's going? Could be a bit of a trend, but it's too soon to tell. The overall new listings do remain ahead of previous years, and the number of contracts signed have ticked up slightly this week. They are down compared to 2021 levels, but that was a crazy, unprecedented year. They do remain ahead of 2019 levels. And as I said, the overall contract sign continues to remain above 2019 levels, suggesting the slow feeling is relative to last year's excessive pace, but not as compared to historical levels. Something to think about, sellers. If our top part of the market this year was January, February, March. If you made your deals, if you put your properties on the market, made your deals in those months, you absolutely hit it right. That isn't to say you shouldn't put your properties on the market now. You should. You can see that there's still lots of contract activity. We're still seeing a very strong market. What you want to focus on, whether you're under 2 million or an over 2 million listing, is you really want to focus on your pricing. Now, how do you know how to price when the data won't be in for another, let's say, 3 months? We don't really know yet because these deals have not closed. They are just in contract. So we have no idea where these deals have been made. We don't have enough data to form truly an opinion. But what could you do in the meantime? Well, here's what I would recommend. If you are a seller thinking about selling, just put your property on the market. Don't wait. We know we're in a climate of inflation, interest rates, all these things are on the horizon. So why wait? Also, how do you know how to price? Well, with regard to pricing, perhaps take an adjustment of the demonstrated closed prices within the last, few months and adjust that by 2 to 3%. Don't do anything too dramatic. The market doesn't really seem to be calling for that, but it is advisable to get your deal done as soon as you possibly can. You've heard me say this a million times. Get your deal done in the first 30 days. That's when you're going to make the most money. So it's all about the pricing now. If you have any questions about that, feel free to post them. Let me know, reach out to me. Happy to talk to you about this in more detail. Hope it's not too confusing. We are in transition, so these times are slightly uncertain. We're not quite sure where it's all going to go, but I promise you that I will always give you the very latest information as I get it. All right, that's it from Manhattan. Let's move on now. We're going to talk about what happened in Brooklyn. The supply in Brooklyn was 222 for last week. That is down 21% from the week before, and the contract signed 186. That's up 18%. Still in a seller's market. But here are some things to consider. I've shared some charts with you that address supply. So the actively listed inventory in Brooklyn has ticked down a bit. It's still, the trend is that it seems to be steadily rising. The pending sales in Brooklyn also ticked down sharply, but remains elevated comparatively. The weekly new listings are at a slower pace than 2021. We haven't seen in Brooklyn as many new listings as compared to this time last year. And contracts signed have ticked up, but it's been erratic, and there is some hinting that perhaps the buyer activity is actually slowing. Now, the cumulative number of contracts signed in Brooklyn is below last year's running total, but actually not by much, which is impressive because 2021 was a very impressive year. Here's something to think about, or just perhaps I'm stating the obvious. Brooklyn buyers are still feeling the pinch of low inventory, and it breaks down at different price points. Under $1 million, there's only a month positive net new listings since January of 2021, and that is just the tightest part of the market in Brooklyn. If you're over $1 million, those buyers in Brooklyn have seen some relief, but practically speaking, it too remains tight. The only place where buyers perhaps are seeing a little more relief is in the townhouse market. They may have sensed that there is more new inventory than they have seen in the past few months. So let's see what happens with that. Across the market, luxury, Manhattan, Brooklyn, we are in a shifting market. We are entering some new times with what's happening with the stock market and inflation and rising interest rates. So probably nothing too extreme is going to happen. Don't forget, in New York City, we did not have those meteoric rises in our prices. Perhaps that will protect a little bit from dramatic shifts and swings in our pricing. Right now, the data is not in yet. We have to see where we will know where we are in a few months, where these prices actually have settled. But advice to sellers, just like with Manhattan, make sure that you're paying attention to your pricing. It's always important to do that, particularly important to do it in a shifting market. So 2 to 3% adjusted from where we have demonstrated that we have been in recent months. Probably not a bad idea. Worst thing that will happen is you'll get a bunch of buyers jumping in and it'll go over your asking price, because it will get people excited because they will sense that this is tremendous value. Buyers, don't despair. We are seeing inventory coming on. If you want to buy something, this is probably as good a time as any to do it. You are not looking at the frothiest part of the market. There are properties that have been sitting. Perhaps there's something there of interest, and those sellers perhaps may be a little more negotiable. You may want to get your deal done so that you can lock in at these still historically pretty low interest rates. Okay, those are my thoughts about where we are in the New York City real estate market. I will be back next week with more up-to-the-minute news on what is happening in the luxury market, the Manhattan market, and the Brooklyn markets. As always, feel free to reach out to me with any questions. Feel free to subscribe to this YouTube channel, because I'm always posting the latest news so that you can stay informed and make great decisions. So I will be back next week. In the meantime, take care.